Hi there folks, welcome back to the EdgebyRS Academy. I hope you guys are doing well and had a profitable last week. For today's session, I'll be touching upon 4 key topics. First, balance and gap rules. Second, how to participate on trend days and week. Third, how to identify a developing V-shaped recovery. Yes, I'm talking about Friday. Luckily, I was active in Discord and I called out a live long in ES at 5207 and in NQ at 18252. Lastly, I'll talk about the week ahead and the key levels that I am watching. So without further ado, let me switch my screens real quick. So heading into the week, what is it that we knew? We knew that value was migrating lower. Now that was the first sign we had of potential weakness developing. Now, let me remind you, if you guys watched my last week's recording, this development of value migrating lower is not something that every textbook profile trader would have identified. Now the reason is because I did not merge the entire week's profile. Instead, what I did is split them. I did a partial merger, which is merging the post CPI consolidation, left Thursday independent and Friday, because Friday was a result of Thursday's emotional selling, as well as we were heading into the holiday a long weekend. So naturally, this squeeze had to be viewed independently. And we did a very good thing, because what it did is it gave us a heads up heading into Tuesday. And look what happened on Tuesday. We found a textbook list framework short at 53.27, 53.33. Now, those of you who have been watching my recordings, reviewing my weekly plans, you already know how important this zone has been to me, and trust me, it will continue to be important. It is pivotal. It will be important on any sort of upside we see to ultimately clean up the Globex all-time highs at 53.68. Of course, if we do manage to get in earlier, fantastic, but at least you know this is the last spot you can get in, and that will be a clear 30-point opportunity waiting for you. Of course, you would want to take some partial profits off at 53.47.49, which is the prior all-time high. So now, this list framework short wasn't the only reason for pulling the trigger here, but I also shorted because DAX. Now this is where intermarket confluence becomes important. Now you guys must make notes where in the past I have highlighted how I view the markets. So this is like a methodical process that we follow. That is, we look at the structure on higher time frame, on a daily time frame, 30 minutes. We look at intermarket confluence, and once everything comes together, we participate at the zones of interest. So again, the reason we shorted is very simple. One, I was expecting a cleanup of 53.18s. Now, if you guys were part of the live Zoom session I hosted on Tuesday, I spoke about it and why. If you happened to have missed it, in Discord, I have a channel which is labeled as study materials. You can go under the session recordings and you will find the link there. So real quick on my screen right here, session recordings, and there you go, Y5318. So that's reason number 2. Number 3, DAX was below its open despite opening on a gap up. It went below its open, and ultimately as US RTH was nearing, or US coming near to its open, DAX was below its IB low. Now that's a red flag to me, where often London weakness then spills over into US, and that's precisely what happened. At the same time, NQ was below its inside day low. Again, a textbook list framework there as well at 18,926. Enough and more, enough reasons for us to short for 53.18s and subsequently ride our runners to backtest Friday's launchpad, which was essentially the squeeze we are talking about. So that was how Tuesday played out for us. Now, what's interesting, what happened on Tuesday is, again, value continued to migrate lower. So no matter what happened here, observe the value, right? That's very critical. A lot of traders look at price, but being profile traders, we can definitely always observe value. And if you have the right lens of viewing these developments, then you will most likely be on the right side. And look what happens as value continues to migrate lower. There you go. On Wednesday, we opened on a gap down. Again, the gap rules, they've been with us. Very, very important. Now, I happened to have spoken with a member during the week, and he struggled with the application of gap rules. Now, let me make this simple because there's a very good point that I made to him, which was, oftentimes when you are trading the open, which is the opening level, because that's what the gap rule suggests, right? Above the open, you want to be long. Below the open, you want to be short. And if it's a gap down, being below the open is a gap and go, and above the open is the inventory correction. So oftentimes you will have probably 2 or 3 subsequent 5-minute candles holding the open, and you ultimately get to see a inventory correction. Now that's the most easiest gap setup that you can get. But when it gets tricky is when it starts trading below the open. Now, when it's trading below the open, instead of following price and trying to execute your trades, you want to observe what was the action above the open, what is the action below the open. Your decision to pull the trigger isn't dependent on, and let me take this as an example, 52.79, which was, sorry, just a second, 82, sorry, yes, the open was at 52.82. So your decision to go long or short isn't dependent on what happens at 52.82. It is actually dependent on what is happening prior to reaching 52.82. So if I just get down on 5 minutes, and what you will observe is, just a second. And what you'll observe is, we did in fact look above, right? And we did look above for precisely 3 points, right? So this was your first observation that you had to note. Okay, this was a 3-point look above. And look what happens thereafter. We also look below for an equivalent 3 points again. And then we have first attempt to push up. We've dropped back down. But look again, no more than 3 or 4 points on 1, 2, and 3 visits. Now what that tells you is, now this is where the story is being printed, right? There's lack of interest below the open because it is within the standard gap trap I always talk about, that is between 3 to 7 points. Now that is precisely what was happening here, and this is where the story started to form, and is precisely why after my first attempt to short, instead I took and switched to a long, targeting gap fill, which is up at 52.97, is it? Yep, 52.97. So what's important is observing what's happening on either side and then making your decision. Now, a lot of traders are like, okay, by the time we are assessing this, which is the look above and fails or look below and fails, tracking the magnitude of the look outside essentially, what if we miss the move? And that's absolutely fine. You can miss the move. I have missed the move in the past. I will miss it in the future. It is not about chasing this. This is about reading it tactically, having the confluence that you need, and then pulling the trigger. And that only happens through experience. But what I can always tell you is don't wait for the open to guide you. Observe what is happening on either side and then make a decision already when price is at 79, 80, 81, where you're so clear that yes, this was a trap, lack of traction, no new lows, and there we go. We want to be long, and let's say a potential prior swing low could be a stop loss. So in this case, maybe a 78 or a 77, and you're long right at 82 to the tick. This is how I do it. Okay, again, each to their own, but this is my way of reading the action, and is why when you see my entries on Discord, they're literally at the open or probably a tick or two away. So that's how I do it, and that's exactly how it all worked out on Wednesday. Now, this is not the only reason, which is gap rules, for us to be long targeting gap fill. Now, again, we'll switch over to the weekly, and right here, a very important note on the confluence of 52 70s, from all the way from 71 to 75. Very, very important confluence, and this is where I noted this is where you will find shifts happening. And look what happened. We dropped into it, lack of traction. You're going long against support. Now remember, that level by default is support. Why? Because we are coming from above all the way down to this golden 70s, and that is where you know gap rules is with you now. Lack of traction, you have the 70s holding up. The story has now formed. You know gap is a very good target, and there you go, we started grinding higher. Now, apart from what was happening here, again, let's bring in intermarket confluence. Look what NQ was doing. Again, guys, I'm not showing you the NQ chart. That's your homework. You got to go look back, because that's how you will build your memory. So when you look at the NQ charts, you will realize how NQ had an opening drive higher. Period B did not retrace more than 50% of period A, and subsequently continued to push through its prior day low as well as the value area low of the prior session. Now, given that strength, we know we can be long. Why NQ strength is important? Because S&P 500 is about 27 or 29% of technology stocks. So that's the heavy lifting. The heavy lifting is being done. We can see it. Now your participation becomes easier. Now that's how I thought through this entire trade in those seconds or minutes when we were trading. Now, how I was able to do that? Because this is my process. This is what I've been following. So what happens as you keep repeating this? It becomes second nature. Again, let's move up. Now this is where balance rules comes in. Look at this, what happened. We started defending the prior inside day low at 52.94. Prior session low was at 52.97. Again, I'm sorry guys, I have a bad throat, so I may keep pausing this recording here. So again, balance inside day low. Again, remind yourself of balance rules. We are already below 53.03, which is our anchor balance. Again, let me quickly pull it up here. There you go, 8-day balance low at 53.03. So it's been with us. We know it. We are below balance. That's the first point. It's there even in the profile chart. There you go, 53.03 and 53.47. So we are below it. We already know it's a balance breakdown. We are below the prior inside day low, which is at 52.94, as well as being below Tuesday's low. And this is why I went short right here, because I had the balance rules at play. The strongest index, which is NQ, is also weak because it is unable to reclaim its prior session's value area low, and that then became a no-brainer. Right, so I've just drawn this white box for you guys. This is the 8-day balance that I'm referring to, and you can observe how we are below it, and that breakdown happened during EU session. So we know it's a balance breakdown, and what does the balance rule suggest? We are then observing for 100% rotation to the downside, and that takes us to 50 to 59. Again, if you recall, 50 to 60s is the untested value area high from the CPI gap up session on the 15th, is it? There you go, on the 15th, and that was the value area high for 14th of May. So we had very good confluence, and always remember gap rules. The longer the distribution within the balance range, the more stronger is the break going to be. So this one balanced for about 8 days, and you can observe how we started breaking down, and ultimately you could say PCE, you could say PMI, whatever it may be, ultimately we got a massive liquidation break. And nothing unusual about this liquidation break. If you've been reading my plans, I've been talking about how 5220s needed a revisit, and that is something I precisely mentioned even on my charts. Just a second, I think that was the daily chart that I posted. Right, there you go. 50 to 20 needs a revisit. That is what I posted on the 30th. So the vision was clear, and ultimately that is what we got to see on Friday. So again, the gap rules, I hope now this really helps you. The balance rules now break down, observe the period that we've been distributing within. As soon as there's a breakdown or breakout, you want to try and follow. So now guys, just take a minute and think. We started the week knowing value was migrating lower. We started the week with Tuesday continuing to push down. Overnight session breaks the inside day low, breaks the 8-day balance. We know there's weakness. Look at the intermarket confluence. NQ, DAX, weak. They're below their open each time. Sorry, DAX below the open, below the IB low. Each time US is coming online. That is all suggesting weakness. Upside is lacking traction. Downside finds liquidation. That's how you start gauging that yes, the breakdown is coming through. All I want to do, if you are good enough, you can, if you're good, you can always play a two-way. But if you want to focus on one, and when the trend is clear, which is down, all you got to do is wait for a good rip, short at a good zone of interest that I share with you guys. So that is why, if you recall, I've been short Tuesday, I was short on Wednesday, and then we were also short on Thursday. Same reason, guys. Remember how I said 5270s is the magnet, is the most important zone, and we've been dropping into it. That support first up, but look what happens thereafter. It turns into resistance. And again, those of you who are part of Discord will know I did not even attempt a single long here, even though the gap rules suggested so. All I wanted to do is short because we were under the most important level. That's the most important piece to me, and is why we were short, and ultimately that did pay us. Now observe, each time when gap rules are at play, what is it you want to see? If there's going to be an inventory correction, you want to see it happen quickly. One, if it takes time, you know that the side is weak. So inventory correction in this case on a gap down means the buyers are weak because they're taking a very long time. Now let's say they take a lot of time, that's absolutely fine, but you want to then observe what happens when we get past period A, IB period, London close, and US lunch. And if through all those specific time periods ES is unable to move higher, that to me is a red flag, and that's precisely what happened on Wednesday, where we had the London close at 52.90s. We had everything, all three sessions, which is period A, IB, London close, US lunch, all of these periods couldn't find traction, and ultimately, given the confluence present as well, we got a breakdown towards session end. Now observe, up until here, value continued to migrate lower. And again, same story, we come back, spend a lot of time, we form a low here, which is essentially testing the anchor balance. Of course, it missed by 2 points, I get that. But broadly, it is back testing during London session. We rallied, but look what happens. We pull back, higher low, right? That's how you want to see it. We cleaned up 52.60s, which is very important. That was the magnet we were after. And look, and that's where we did explore along at 52.60s. But look what happened. Again, a slow grind up and fails to find traction post US lunch. So the London buyers tried. Once London went home, the US buyers tried. Both tried to fill the gap, and ultimately we again came back below the open. That is weakness, guys. If at all there had to be any buyer strength, we had to see it off this anchor balance during London, not visible. We had to see it on the fill of 52.60s, not visible. We go back up, lose the open, clear short. Why? Because evident buyers are lacking strength. Guys, if buyers are in control, you're going to see that through every session turn. Did not happen. And once we were below it, as you can see, and if you recall my note on Discord again, I was expecting a cleanup of 52.50s given the poor low right here, and we precisely got just that. Again, let's move on. Now this is where gap rules become important. So we already know 8-day balance failed, short. Inside inside day low failed, short. Value migrating lower, short. Key levels from support turning into resistance, list framework, session turn to session turn, short. Evident, and we've been short. Now, on Friday, overnight session, weak, back below the anchor balance. Now remember, this is weakness, guys. This is the first look below we got, and then any reclaim. You cannot get bullish here because now you want to think, wait, okay, this is a reclaim, I can be long here, but can we take out the golden 52.70s? If no, if the answer is no, you want to be skeptical of this entire move, and in fact, you should seek to go short to revisit this region. And given that I was anticipating 52.20s again, nothing like it. You had the best opportunity to short at 52.70s. Of course, I joined once we started losing this PCE candle following the event strategy, lose the release candle, and I'm short. So I shorted at 52.49. Again, target was one. I was targeting 52.20s, and that's precisely where we got. So again, let's go through balance rules here real quick. Breakdown, clear. Now look at this. Look below, fail, higher, lower high. Once we get that lower high tempo breakdown, follow it. Now remember, when it says grind lower, we are observing for list framework, we are observing for confluence. But when we already know weakness is present, guys, look at this. I don't know how many of you guys draw trend lines, but it doesn't get better than this. You've already got a downtrend trend line. It's working beautifully. Of course, I've drawn an official one in this week's plan, but again, you're seeing this moving lower. You're seeing those lower highs. You're seeing the key levels failing. You're observing value migrating lower, and you also have a magnet down at 52.20s. So any high tempo breakdown, and this is your no-brainer short. Gap rules in mind, and the first target, as soon as we break this balance, your first target is the balance halfback, or like I said, 52.20s within the region, within the vicinity. That's what you are targeting. So guys, balance rules must be something that you master along with gap rules. So like I said, with gap rules, you want to formulate, you want to build a story in and around the open to participate at the open. Opening level is to participate. Opening level is not where you make a decision. Decisions are made that is above the open or below the open. And with gap rules, you want to remember longer the consolidation, stronger the break. And if the break is stronger, it's going to get you that 100% extension. And if that extension aligns with any magnet plus or minus 10 points, fantastic. That is going to be your no-brainer trade. Similarly, any high tempo breakdown, similar action seen during London, lack of tempo at the top. These are clues that markets give us already. Lack of tempo here, we know buyers are absent. We look below, buyers are absent. Why? Lower high. Again, resistance. We got stuck at 52.70s and ultimately flushed lower because we still had a magnet. Now, so I've covered for you balance and gap rules. I've spoken about how you can participate by using all these clues. Again, guys, if you're not too, if your memory is not the best, no problem. Take a note. Get a checklist ready. Every single day, put a tick mark, put a cross. What that will do, that will keep reminding you, reiterating for you what needs to be done when certain sessions develop. Now, observe here, we were one time framing down into exhaustion, into my support. Now observe. First, we exhausted for the week, 126 points. Why do I say 126 points exhaustion? If you guys recall, 108, 1117 is my exhaustion. So we already got exhausted for the week according to me because we've dumped from the highs of Tuesday into here. That is exhaustion. Now, number two, why did I look to catch along here? Very simple. If you've read my weekly plan, I very explicitly said that we believe structural levels remain at 51.40.60s and 51.94.204 to gauge high time frame shifts. Again, I did not anticipate a breakdown of that zone on Friday, to say the least, because like I said, guys, I'm not expecting a dramatic breakout or breakdown at least until FOMC, which is around second week of June, which meant that at least the first test, markets can surprise us. I'll take it as it comes. But for now, on first test, it made complete sense because we exhausted and we were moving into the major pivot right there. And NQ, on the other hand, was dropping into 18,252. Now, some of you in Discord sent me a message asking why that level was important. Guys, look left. That was the FOMC basing level in not the last month, the month prior to that. That is when we had a base there, and FOMC release resulted in a pop higher. So that's the launch pad. And once we got down there, it was like, okay, I have a confluence of a very strong level in NQ, and now ES is right there. They've all exhausted. They're at the perfect zones. This is where I want to attempt catching a knife. Now remember, I don't know this is where we're going to bottom. All I know is this is a good zone, and everything that I observe for intermarket confluence, looking at exhaustions, looking at intraday exhaustions, looking at everything that I have, intraday single prints, I looked at everything and I'm like, you know what? This is where I want to go wrong. This is where I will accept being wrong because it's a one hell of a location. And ultimately, you can see what that location ended up doing resulted in a massive squeeze on Friday. Did I expect this squeeze? The answer is no. But was I positioned for the squeeze? The answer is yes. Why was I positioned for it? Because it's a major pivot. I'm not expecting a breakdown. This is a poor structure. At the very least, I expected a move back to 48. Or even as much as to clean up the gap. Of course, we got much more than that. We got it in a much shorter time. I would have probably expected it to Monday or something. But we got it all on Friday. And that's absolutely fine. So, not only that, thereafter, anytime you're observing a liquidation break, you always want to prepare your mind. There could be a V. So if we got the exhaustion, we have the confluence. And before I move forward, that confluence, look what DAX was doing at the time. You remember throughout this week, I've been just talking about how DAX is below its open, DAX is below its IB low, and it's been a short. Even ES is turning every support into resistance. Balance is, you're breaking outside of the balance. It's all bearish. It's all trending lower. But you know what was happening on Friday? When ES was liquidating, DAX was stagnant. DAX was still within that same 50 point, 80 point range that it was all morning. And you know, that is why when we came down to 5207 region, I'm like, you know what? I want to go long because DAX is still not moving. And DAX wasn't. Even after DAX session ended, DAX did not flush lower while ES was. So it was very evident to me that this is some allocation that is bound to deliver. And as we reclaimed the London close, which was at 52.23, from there onwards, you can start observing how ES started one-time framing up. And when you see this one-time framing up, you see those intraday singles being cleaned up. That's the message. A V shape is now likely. Is a V shape going to happen within the same session? Will it happen or complete within the subsequent session? That is always to be seen. My job is not to predict that. My job is to find the best of the best locations and go for those magnets that I've identified. And that's how you identify a developing V. And with that, I was able to successfully participate in the move and called it out live. So I hope you guys have understood today in greater detail how to trade the gap rules, how to think through them, how to use balance in conjunction with the trend. One, use it along with gap rules, because think about it, we are below the balance, gap down, weakness, confluence with confluence with DAX, confluence with NQ, weakness, you want to remain short. Then the developing V shape, the balance breakdown on high tempo, list framework, again, the observation of EU testing anchor balance stop, lacking traction, again on a breakdown, reclaim here, again got PCE lacking traction. So just think about it, even after the event, which is supposed to be something that adds impetus to markets, even that very event, yes, you got the move up, but look what happened again. We failed here. So you see all these clues, once they come together, you automatically get that confidence to be short. And of course, this is all vice versa to be long. And lastly, now the week ahead. Guys, it's very, very straightforward from here on. First, we've got the ECB 2 days down the road. I think it's Wednesday. One, which means markets likely will be in that wait mode of sorts, right? Because that's one of the first central banks which is actually talking about reducing interest rates. Not even the Federal Reserve is doing that. It's the ECB. So let's see what happens. But at least for the next 2 days, we can expect consolidation. That's one. So we already know the character, what to expect. Where it consolidates, does it get back inside this balance and then consolidates? Does it consolidate between the two balances? It is to be seen. But what is important to note, consolidation, because when you see a slow open, when you see a slow session, you are prepared because you know this is going to consolidate. That's the first thing. Second, the late day spike, which means spike rules at play. Again, you don't need to complicate this. You know 5270s is important. What is it that you want to see first up? You want to see a move down, back test that holds. You have your list framework, you have, I don't know, NQ confluence, DAX confluence at the time. You've got everything that I've taught you coming together at 5270s. We will look for a long. But the moment we get back again below, and especially below 5266, which is the initial balance, it's a short. Similarly, any look above, let's say we open up, it's a look above. Fair and square, we want a backtest to join, of course. We're not going to chase this move. Look above, we'll backtest. Once it backtests, we can always go long. Or look above and it fails, comes back down, back below the spike. What do we know? Rotation do the spike base first, from top to base. Also, this move, what it has resulted in, I don't know how Sunday and how Globex opens up, but what I know is if it keeps chopping here, if it keeps hovering here, we will be opening on a value gap up, which means gap rules will be back in play. And what I also know, because it's ECB and we're going to be in a wait mode of sorts, it is not unusual for me to expect a back test down here to clean up, to back test, to test that value area high and then move higher. So this is how we will be thinking into Monday and Tuesday. Again, whatever happened this week, the same thing in reverse will be applicable either to the upside or the same balance rules at play to the downside. So be prepared. Monday, value gap, very, very important. Again, do note the value gap this time around is at 52.64. Not a coincidence, guys. We had a value gap left behind due to CPI just 2 weeks ago, exactly at 52.60. And now, 2 days ahead of ECB, and we are staring at a possible value gap at 52.64. So what the market is telling you is, let 52.60s guide you on weakness, and 52.70s guide you on strength, and let the edges of the balance validate that strength or weakness. And that is how you want to think. So I hope you guys feel better prepared. Again, very important, read my weekly plan. It covers everything in detail. The whole idea of talking about the week ahead in the last few minutes is to give you a better perspective so that you can possibly rewind again, listen to again what I'm suggesting to be better prepared. So again, please do review the weekly plan. That is our Bible for the week, let's say. So I hope this was helpful, and I will see you guys again next week. Wish you a profitable week ahead. Take care. Bye-bye.